What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell for me so that you're notified every time I upload a new video. Please be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. So please don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put at least 1 penny in that account. They're going to give you 12 free stocks valued all the way up to $30,600. So after the video, I want you guys to go down to the description box of the video, click on that Webull link, open up your new account today, go get that free stock, go get that free money. What is going on with our stock market? It has been rallying like crazy. The S&P 500 is up 15% from June of 2022. The Dow Jones Industrial Average is over 3,300 points, I believe for the first time since January of 2022. And the NASDAQ has rallied as well. Have you seen what has happened to tech stocks lately? Companies like Apple, Microsoft, man, these guys, Tesla, these guys are doing incredible. You may be asking yourself, well, why is the stock market rallying? And I'm going to give you guys my opinion why I believe it's rallying. Again, just a guy on YouTube, you have to go out and do your own research and come up with your own conclusion. But let me tell you what I think. So inflation is 9.1%, right? So it's out of control. We've had 2 quarters of negative GDP. All that means is for 2 quarters in a row, our economy here in the United States is shrinking instead of growing. It's getting smaller. That is not a good sign. That's negative growth. Not a good thing, right? So you got inflation that's out of control, 9.1%. You got 2 quarters of negative growth in the U.S. economy, but yet and still, our stock market is rallying, right? It's amazing to me that that's happening, but here's why I think it's happening. When you look at the jobs report from July 2022, we grew jobs by 528,000. Guys, that is phenomenal numbers in job growth. So you got high inflation, you got negative GDP, but you got amazing job growth. That tells me the American people got money. Anytime the American people got money, what do we do with it? We spend it. And the reason we spend it is because 70% of the United States economy is based on consumer spending. That's what we do when we have money in the United States. We don't typically save money very well, but we do spend money very well. And that's what's happening. So a strong job market, right, is what's propping up our economy. And that's what's propping up the stock market. Now, the economy and the stock market are 2 different things, but hear me out here. When people are spending money, who are they spending it with? They're spending it with companies. Who make up the stock market? Companies. So although our economy and our stock market are 2 different things, the common denominator is who? The American people and spending money. So when American people spend money, companies are gonna grow. When companies grow, guess what? The stock market grows, right? And that's the common denominator, in my opinion. It's just the American people spending money affects both our economy and our stock market. So investors, institutional investors make up 75% of the investors who buy shares in the stock market of companies, right? 75% is institutional investors. Retail investors like you and I make up about 25%. But here's the deal. When those institutional investors sell off, when they sell their positions, guess what that does to the stock market? Stock market goes down. When those big institutional investors start pouring money back into the stock market, guess what happens? Stock market goes up. And that's what's happening right now. See, institutional investors are in the business of making money. And at some point, they have to get back in the stock market in order to make money. They cannot keep their money on the sideline indefinite. They can't. They cannot do that because they have a fiduciary responsibility, one, to protect and make money for their clients. But they cannot make the kind of money their clients need to have made if they're sitting on the sideline and just in safety. So at some point, they got to get back into the market, and that's what's happening. See, in June, investors sold off. July rolls around. They're on the sideline. Guess what they said, though? Hey, we got to get back in the game. We have already priced in high inflation for July. We've already priced in negative GDP for the second quarter. See, they'd already priced all that stuff in. So when that bad news came in July, it really didn't affect institutional investors because they already priced in that bad news. So they started jumping back into the market towards the end of July. They started jumping back into the market, buying up stuff, right? Buying companies, buying shares. And guess what that did to the stock market? Boom, started that bear market rally. And that's all it was, guys, in my opinion, is institutional investors getting back into the game, investing money back into the stock market. And guess what? Boom, stock market starts rising. Also, what happened was several of our large tech companies towards the end of July posted really good second quarter earnings reports, right? Apple, Microsoft, Amazon, they all posted really good second quarter numbers. So that also helped pour gasoline on the fire as it relates to the stock market. So that's what we're seeing right now. Coupled with you're getting that really strong July jobs report where we added that 528,000 jobs. That was just icing on top of the cake, right? Just icing on top of the cake, which continued to fuel this bear market rally. Will it last? I think as long as jobs stay strong, right? The labor market stays strong and Americans have money to spend because they're employed and they're working and their wages are going up. As long as that continues, I think we won't fully go into a deep recession. I think we're already in a recession, but I don't think we're going to go into a deep recession as long as we continue to have a strong labor market. And I think what you'll see is institutional investors, if they do get some bad news that they haven't priced in, you'll see a sell-off. But ultimately, they got to come back in because that's how they make money. So as retail investors, what should we be doing? And you guys know I preach this in every video. We should be dollar cost averaging in. When times are good, when times are bad, we should be dollar cost averaging in with a certain dollar amount every single week, every single month, buying our favorite companies, our favorite ETFs, and our favorite cryptos. We should not be trying to play the game that big institutional investors play. We don't have their financial resources in order to play that game. We cannot manipulate and move the market like they can. We're just retail investors. Our strong point for us should be buying good investments and then just dollar cost averaging into those good investments with a long-term outlook, 5, 10, 15-year outlook. I'm buying these companies, right? And 5, 10, 15 years from now, my goal is hopefully to invest in those companies and they be stronger companies 5, 10, 15 years from now, which will do what to my investment? It will grow my investment, which does what for me? Increase my net worth, puts net worth in my pocket, gets me to financial freedom. That way I can own what? 100% of my time. Right now, if I'm trading time for money, whoever pays me, wherever I get my money from, that is what controls my financial destiny and controls my time. The only way I get those two things under my control is I got to create assets that do what? Create passive income. Enough passive income to take care of my lifestyle. That's the only way I get those two things back. My time and my financial freedom. Enjoy this bear market bounce. Continue dollar cost averaging in. And let's just continue doing what we do to build wealth, which is pretty simple. Earn, live on less than what you earn, stay out of consumer debt, save and invest. That's it. You do that and you become very good at that. You will build wealth and you will get yourself to financial freedom. Guys, drop me some comments and let me know what you think about the bear market rally and how long do you believe it'll last? If you want up to 12 free stocks, click on that Webull link in the description box of this video. Go open up that new account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. You can see it in your mind. You can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.